Is your mortgage going up even though you have a fixed interest rate? Yeah, it probably is. That is what I'm talking about today. I'm seeing these videos all over social media right now of people talking about how their mortgage goes way up, like $600. Some were like $600 a month, which is just mind blowing to me. I've never had anybody go up that much, but I want to talk about what you can see here in Utah and things that may help you avoid those huge increases. So let's jump into it. Okay, so the number one thing that can make your mortgage payment go up is property taxes, especially on new construction. But before I jump into why it happens, let's talk about it. So you have something called an escrow account when you get a mortgage, and that is the bank protecting their assets. So they're not going to allow you to default on your property taxes and have the county foreclose on it. So they collect that in an escrow account, and then when property taxes are due here at the end of November in Utah, the mortgage company sends the check because you've been paying them a little bit each month. So that's how the escrow account works. But what happens is the mortgage company will send you a letter towards the end of the year once property tax notices come out, and they will say, hey, your property taxes are going up, and so we need to collect, because here in Utah, it's very interesting, but you pay your taxes. So in November of 2025, I paid my property taxes for the whole year of 2025. So we pay backwards here in Utah. So let's just say, for instance, I don't know how much my property taxes went up. It wasn't significant, but they'll say, hey, your escrow account for 2025 because of the property taxes is short, and you have to pay an extra $25 per month, or you can pay us one lump sum right now. So $25 a month, that means my escrow account was short $300 for 2025. So you get those two choices. Otherwise, they divide that up and they say, okay, moving forward, your payment's gonna go up $25 a month to make up that money. So that's great if you don't have the $300 to pay one lump sum. But the thing you have to remember is now they have to collect that higher rate for 2026. So you're paying $25 extra per month for 2025 plus $25 extra per month for 2026, which takes it to $50 more a month on your mortgage. So hopefully that makes sense. But where it's really problematic is new construction homes. And builders have been offering amazing incentives like 4.99%. So people are very drawn to new construction. But here's why people get in way deeper than they realize with new construction. When you purchase the home, the builder has been paying property taxes based on unimproved land, a piece of dirt. Well, they build your house and that is now improved. And depending on the size, the area, all of that, maybe the builder's been paying $500 a year property taxes on that piece of dirt, but because you've improved it, it's $3,000. Well, they estimated $500. That means you're $2,500 short on your taxes come due. So that is where you see a lot of people get in trouble and not count on that big of an increase in property taxes. And I'm not gonna drag this out, but the same thing would happen on new construction, just with bigger amounts as what I just talked about with existing home sales. So if you are looking at getting into the 2026 real estate market and you think new construction is your way to go because of those good incentives, reach out to me. Let's talk about it, because there are things that you really need to watch for. You don't want to shop at the top of your pre-approval and then find out you can't afford the house when taxes come due and you have to pay more. I hope you're finding the video helpful so far. If you haven't already, make sure you subscribe to my YouTube channel and click that bell. That way you're alerted each week when I drop a new video. Okay, the second reason why your mortgage payment will go up is in your escrow account, they also collect on homeowners insurance. And homeowners insurance is going up everywhere. I was actually just shopping for new car and auto insurance last week, and the insurance broker who shops many different people, many different companies, said, yeah, premiums are going way up because of the wildfires in the West. You have hurricanes, like these insurance companies are paying out huge amounts, not to mention the cost of goods is higher. So if something happened to your home, it's costing them more to replace it. So in your escrow account, just like your taxes, is for your homeowner's insurance. And the same thing happens if your rates go up. On your homeowner's insurance, the mortgage company will pay that to make sure that you're current on your homeowner's insurance, but they're going to come collecting that from you. So you want to make sure that that is good. Now, if you are in a homeowners association, a lot of homeowners associations right now, they're changing their insurance policies to have a higher deductible, which you need to notify your homeowner's insurance of that as well, because most HOAs now are going up to $25,000 deductible. So if you have something that happens in your home and you have to open an insurance claim, you're going to have to come up with that $25,000. Well, most people don't have that. So there are policies in place to help you cover that $25,000 deductible. And so all of that plays into your rates, and you want to be very careful about that. So since we're talking about HOAs, most homes in Utah are in an HOA. Now, your HOA dues are separate from your mortgage payment. However, I think it's really important to talk about that because it is a monthly expense tied to your home. And because of insurance premiums going up, the cost of services, so if your HOA pays for snow removal in your community or landscaping, those services are going up and they have to pass that on to the homeowners, which means higher HOA dues. So that is something else to be aware of. I have a client who their HOA dues went up, I think it was $40 a month just this year alone. And I mean, they haven't lived there very long. They bought in November of 2024, but already they're seeing a $40 a month increase in their HOA dues. So you need to be aware of that if you're buying in an HOA. Okay, let's talk about what you can do to help, especially on new construction. When you get your assessed home value, we are a non-disclosure state in Utah. And that means the county does not need to know what you paid for your house, and you should not disclose that to them, more than likely. Now, I will say the county is getting great at estimating your home value. Like, it used to be really far off on your home value. And this past year and at the end of 2025, most home values I looked at were within about $10,000 of what the actual value was. So they're really nailed their algorithm or whatever they're doing to know your home value. However, you don't have to disclose that. And when my son purchased his home at the end of December, that was a conversation I had for him, is the county is going to send you a letter saying, hey, congratulations, you bought a house. What did you pay for it? You do not and should not respond to that with what you paid, because now they're going to assess your property taxes based on what you report to them. Now, there are situations where If values went down, which is not the case we've been seeing here in Utah, really, if the values went down, then it would be beneficial to report that and give your appraisal showing that your home is actually worth less than you paid to lower your property taxes. But that does not usually happen. So if you are contacted here in Utah by anybody asking what you paid for your house, you do not need to disclose that. We report it on the MLS as real estate agents, and so other agents can see the MLS access, but as far as property taxes go, they cannot see that. So if you are thinking about making a real estate move in 2026, let's talk. Give me a call or send me a text. That is the best way to reach me, but as always, make it a great day.